trying to stay on top of things in the investment world, it's a lot, right? It feels like you're constantly drowning in data and opinions.
Absolutely.
So today, we're going to cut through all that noise and get to something, I think, pretty fundamental, really crucial: ethics and trust in the investment profession.
Yeah, absolutely.
Yeah.
And the material you found, these excerpts, really lay it out well. Provides a good structure to kind of wrap our heads around this whole idea of ethics.
Yeah. It's all about extracting, I think, those core principles, right? What does ethics actually mean in this world? How does trust play into it? What challenges do professionals actually face? And then, what are those standards that they're held to? We'll even touch on how ethics and the law, how they relate, sometimes overlap, sometimes don't. And we'll even look at a way to kind of think through ethical dilemmas when you're faced with them. So by the end of this deep dive, hopefully you'll have a clearer, practical understanding of this whole thing with ethics.
For sure.
Ready to dive in. So let's start with the basics. What does what does it even actually mean in the world of investment?
Well, according to, what we've got here, it really boils down to those moral principles that help us distinguish right from wrong. It's kind of like your inner compass that guides your behavior. And in investment, it's super important for building and keeping that trust in the whole system.
Right. And it seems like they're making a distinction, these excerpts, between ethical principles, like what you personally or even society believes is okay, versus ethical conduct, like actually putting those beliefs into action.
Yeah, exactly. It's not enough to just, believe in honesty. Ethical conduct is about actually acting honestly, even when it's hard, even when it might cost you something.
Right.
They actually had a really good example. An advisor, let's say, who warns a client about some risks with an investment, even if it means they might make a smaller commission.
Right.
That's putting the client first. That's what ethical conduct looks like.
Totally. So it's not just about good intentions. You've got to walk the walk. You got to put it into action. So how do these individual, principles translate to the whole professional landscape? That's where these codes and standards come in, right?
Yeah, exactly. Think of it this way. A code of ethics is like the rule book, the foundation of what a company believes in, how they want people to behave, lays out, what's acceptable, what's not. And then you've got your standards of conduct. They take those big picture ethical ideas from the code and make them specific, practical, like rules you got to follow every day at work.
Okay, so the code's like the big picture philosophy, and the standards are the nitty-gritty, the street-level stuff.
Yeah.
Sets the bar for everyone in the industry. And this whole idea kind of connects to what makes something a real profession, right? It's not just a job, it's more than that.
Oh, for sure. And the source material actually breaks down what defines a profession, and it goes beyond just, knowing your stuff.
Right.
It's about having that formal code of conduct, those rules we were talking about, and the regulatory bodies that make sure everyone's playing by those rules.
Makes sense.
And crucially, it's about serving the needs of your clients, contributing to society, not just, making a buck. It's about putting the client first, always learning and improving yourself. So when we talk about investment as a profession, we're not just talking about stock knowledge. We're talking about a commitment, you're bound by these rules, by a dedication to, serving others, serving the client.
So expertise, ethical commitment, and a purpose bigger than yourself, really.
Yeah, exactly. And all of that really feeds into the most important thing, trust.
Right. Trust. You can't have this industry without trust.
Not at all. It's the foundation. Without it, things get really shaky really fast.
For sure.
All of those things we just talked about, the high standards, the clear ethical guidelines, having people watch over things, always learning and improving, it all helps to build and keep that trust. When you're a client and your advisor is not only good at what they do, but also honest and looking out for you, you're going to feel a lot better about investing your money.
Makes total sense. So let's talk about why ethics really matters, practically speaking. In the real world of investing, it's not just some abstract ideal, right?
Oh, definitely not. The material talks about a very real impact. Your assets, the client's assets. Financial products can be really complex, even confusing. Most people don't fully understand them. So you're relying on your advisor to be honest and ethical. If they break that trust, well, you could lose a lot of money.
And it's not just about individual clients, right? The impact can be much, much wider.
Exactly. The whole industry, even society as a whole, can suffer if ethical standards are ignored. Think about it. If people don't trust the system, they're not going to invest.
Right.
then businesses have a harder time getting the money they need to grow. Information gets distorted. The whole system becomes less efficient, and that hurts everyone.
So it's not just about, a few bad apples. It's about the stability of the whole financial ecosystem.
Exactly.
Now, we know how important ethical conduct is, but what are some of the things that make it so difficult for professionals to actually, live up to these standards every day?
Yeah, well, the source material breaks down these challenges into two categories, external and internal. The external ones are things like, the culture of a company or the pressure from the industry itself.
Right, so the environment you're working in.
Exactly. Then you got things like bonus structures or promotions, those short-term incentives. They can make people prioritize money or hitting targets over, doing the right thing for the client.
Yeah, pressure from above or the pressure to succeed can lead to ethical shortcuts, unfortunately. What about those internal challenges, the things that can cloud your judgment from within?
Well, the material mentions overconfidence, where you start to think you're somehow above the rules or that you're special, that the rules don't apply to you. Then there's emotional decision-making, where you react without thinking, without considering the ethics of the situation. And we all have this tendency to oversimplify things, to see things in black and white when they're really not. And that can lead to bad ethical choices.
Right, so you're not thinking clearly, you're not seeing the whole picture. And what's interesting is the source points out that those external pressures, the environment, the incentives, they can actually be more influential than your own internal moral compass.
Yeah, that's pretty scary when you think about it. It really highlights the importance of companies and industry leaders, really working hard to create a strong ethical culture.
Oh.
And it brings up a really important point, the difference between what's legal and what's ethical. Just because you're allowed to do something doesn't mean you should.
Right, sometimes the law sets a pretty low bar. Ethical behavior often goes above and beyond that. And this is where understanding the difference between those professional standards, like suitability and fiduciary duty, becomes really important. This is pretty key for anyone listening, I think.
Oh, absolutely. This is crucial. So under the suitability standard, the advisor basically has to recommend investments that are, suitable for the client based on their risk tolerance, their goals, all that.
Right, so it's got to be appropriate, generally speaking.
Yeah, but here's the thing. It doesn't mean the advisor has to act in the client's absolute best interest. It just has to be suitable.
Okay, so it might be an okay investment, but not necessarily the best option for the client. That seems like a pretty big ethical gap there.
It is, and that's where the fiduciary standard comes in. This is where things get serious. The fiduciary standard actually legally requires the advisor to put the client's interests first, above their own.
So no conflicts of interest, always putting the client's well-being first.
Exactly. It's not just a technical term. It's like a legal shield for the client. It forces the advisor to be on your side. And that's a huge difference. When you're picking an advisor, this is like the most important question you can ask.
Yeah.
Are they a fiduciary? Because it's the difference between having someone who's legally obligated to act in your best interest versus someone who just have to make sure the investment is, suitable.
So fiduciary is like client first, no exceptions. Suitability is, well, a bit more wiggle room.
Exactly.
They can recommend something that makes them more money as long as it's technically, suitable for the client.
Right.
So the fiduciary standard is definitely a higher ethical and legal bar.
For sure. And this kind of brings us to the relationship between ethics and the law more broadly. It's not always a perfect match, is it?
No, definitely not. The material points out that a lot of times laws are actually created in response to unethical behavior. Like someone does something shady, it causes harm, and then a law is made to prevent that from happening again.
Makes sense.
But the funny thing is, creating a new law can sometimes create new ethical gray areas. Like you might find a loophole or a way to do something that's technically legal but still feels ethically wrong.
Yeah, that happens all the time. And often ethical rules are actually stricter than the law. Like they're trying to anticipate problems before they happen, before the law has to catch up. The example of whistleblowing is really interesting here.
Right, reporting wrongdoing, even if it means potentially getting in trouble yourself. Ethically, it seems like the right thing to do. You're protecting investors, the public, the markets. But legally, it can be really tricky. Depending on the situation, you could face legal consequences for doing what you think is right.
Yeah, tough spot to be in. So with all this complexity, how are investment professionals supposed to navigate these ethical dilemmas? The source material actually lays out a pretty useful model for ethical decision-making.
Yes. a four-step model specifically for investment advisors. And they actually use the example of valuing a company for an IPO, an initial public offering, to illustrate it.
Okay, I like this.
So imagine you're advising this company that's about to go public. And the executives, they're really pushing you to inflate the valuation of the company, make it seem more valuable than it really is so they can benefit. But you, as the advisor, that's not right.
Okay, so what's the first step? How do you handle that?
Step one is identify. You got to figure out all the potential risks. Like in this case, you might lose that company as a client if you don't do what they want. You also got to identify all the people involved, the stakeholders, the company, your clients who might invest in this IPO, even the market as a whole.
Right.
And you got to think about your own obligations. Like, yeah, you have a duty to your firm and the client, but you also have a duty to the market to be honest and transparent. And there are ethical principles at play here, like putting your client's interests first, making sure your recommendations are based on, solid evidence.
Right, so step one is like a big assessment of the situation, the players, the risks, the ethics.
Exactly. Then, step two is consider. You got to think about all the pressures, the influences, both internal and external. Like maybe you're worried about getting a bonus or keeping that client happy. But you also got to look for guidance, like your company's ethical code, industry standards, even laws and regulations. In this IPO example, those guidelines would probably say pretty clearly that your valuation needs to be, reasonable and that you got to put your clients first.
So step two is weighing those pressures against the ethical guidelines. What's the next step?
Step three is act. You got to take action based on what you've identified and considered. So in this IPO example, the ethical thing to do would be to refuse to inflate the valuation, even if it means, potentially losing that client.
That takes guts.
It does. It's about doing the right thing, even when it's hard, even when it might cost you something.
So act with integrity, basically. And what's the last step?
Step four is evaluate. Look back at what happened, what the consequences were, what you learned. It's about constantly learning and improving your ethical decision-making process.
I like it. It's a continuous process.
It is. So that's a pretty solid framework for handling those tricky ethical situations. And believe me, they come up a lot in the investment world. It's not always easy to do the right thing, but having a process like this can make a big difference.
Absolutely. It forces you to think things through, to be deliberate about your choices. So to sum it all up, we've seen how important ethics is to the whole investment world. It's the foundation of trust, which is absolutely essential for the whole system to work. We've talked about those two key standards, suitability and fiduciary duty, and how they impact you as an investor. We've explored the pressures that can push people to make unethical choices, and we've even walked through a practical model for making ethical decisions when faced with a tough situation.
And remember that constant tension, that push and pull between what's legally allowed and what's truly ethical. Sometimes they line up, sometimes they don't.
Yeah, for sure.
So here's a final thought for everyone listening. Think about all the things we've discussed today. Where else in your life, in your work, do you see situations where just following the letter of the law isn't enough? Where in your gut that something more is required? And what can you do personally to bridge that gap, to go beyond just what's permitted and actually do what's right, what's truly ethical? It's a question we're thinking about, and it's not just about finance. It's about how we live our lives, how we interact with the world.
That's a great question to leave everyone with. It's something we all need to think about.
Absolutely.
Really makes you think.
It does.